thank you everyone for joining us. So we have, the esteemed panel here, and I would like to talk about the cross-border payments with these experts. And what we will going to do is we will go into understanding of how the cross-border works, not in just India but outside the India also, how it works, how it has expanded its way out of the normal cross-border experiences. So we would like to understand on that part from the panelists. So I will start with Subhrajit. So Subhrajit would like to understand from you your views on the global opportunities on the cross-border payments, and how exactly does it for the segment wise, if you talk about on the B2B and C2B segment, how does this opportunity is there for the global payment system per se?
Sure. Thanks,
Yeah.
Vikrant. So I know it's proper lunch time. So maybe a throw question to the audience. Can anyone tell me broadly what's the total digital payments opportunity globally? There was a study which came out very recently, a ballpark number. Anyone from the audience? No prizes, but still, take a guess. No guesses? Okay, the total opportunity is at $195 trillion. That's the opportunity for digitizing across value spectrum on payments. Now, how does that break down, right? The biggest opportunity lies at $90 trillion at domestic B2B. The second largest segment which can be digitized is the cross-border B2B at $35 trillion. And then you have B2C and C2B. Essentially, all of us generally pay in the C2B space, which is card members to business, which is at $30 trillion each. And the smallest segment is at $10 trillion, which is C2C, which is customer to customer, right? So the reason I brought this up is when you just look at the challenges, the challenge matrix changes dramatically which segment you're catering to. Now, if we take the two segments where the purpose of this conversation is cross-border B2B and cross-border C2B, right? The challenges are actually very different to each other. Primarily on cross-border B2B, the biggest challenge one would face is certain countries have very strong limits. They have a lot of paperwork which is there, and to digitize that becomes more and more difficult. Though a lot of fintechs working on this segment, but essentially that is one part of it. Second, also the cost. When you come to the C2B or C2C part of it, I think it's the efficiency of payment of timing which becomes a challenge. And the second again is cost, right? So I just thought we'll lay down that ground for the conversation, because when we talk about the UPI movement, we should look at the two lenses of B2B and C2B slightly differently as a part of this cross-border money movement. Thank you, Vikrant.
Yeah, yeah. Thank you. Thank you, Subhrajit. So my next question will be to you, Neelesh. We would like to understand in our neighboring country how the cross-border payment works. And since you have been into it, like you have been handling it and you have been supporting it for other banks in the country. So how do you see these opportunities in the Nepal per se?
In terms of the cross-border transaction, I would like to touch base typically on the cross-border between Nepal and India transactions, how it happens. Before I share some data on it, if you have traveled to Nepal, or me coming from Nepal to India, the only option that I have here in India to spend is to use either the Visa, Amex, or one of the MasterCard cards. And on top of that, the reliability of these cards and support not supported. So I have to literally carry the cash note while I travel from Nepal to India. And so will be the case for Indian tourists who actually visit Nepal. The UPI enabled app, it doesn't work. The difficulty part is even the RuPay card, there is a limited access in Nepal because of the merchant acquiring, limited merchant acquiring for the RuPay. You'll have to again depend on the Visa or MasterCard or Amex. And on the other side, from Nepal, the mobile banking or the PSPs, the apps that is available are provided by the PSPs in Nepal. It doesn't work here in Nepal, in India. And that is for the C2C related or the P2P related transactions. And if we are talking about the B2B related transactions, the size of the trade, the Nepal actually does the import from India almost around 70% plus of the total import for Nepal is from India, and so is the case for the export as well. Almost 60% plus export is from Nepal to India, is to India. So that also happens through only through the corresponding banking, typically rides on the SWIFT transaction. So when we are talking about the kind of a discussion that happens on the forum like these, lots of things happening in a local domestic level, the UPI, the kind of infrastructure that India has actually built at the scalable level that everyone is actually talking about internationally, not only Nepal. But there are also things happening in Nepal as well, whether that's the old infrastructure of check truncation, ACH, or the real-time retail payment systems, or even in the B2B segment, the corporate payments as well, the RTGS. There are lots of, even in the cards network as well, lots of infrastructures being built as a public infrastructure in Nepal as well. So when we think of a cross-border transaction, there is still lots of difficulty between Nepal and India as well. So there is a lots of scope at the fintech companies, institutional level, clearinghouse level, and even at the government level, and that's what I see. And in terms of the market size, if we look at the total remittance transactions, out of, I have read somewhere that it's around 100 billion inward remittance for India. It's around 3 to 5 billion that comes from Nepal to India as a formal remittance, through a formal remittance channel. And from India to Nepal, the total remittance size is around 8 to 10 billion. That's an inward remittance for Nepal, the formal channel, out of which 1.5 is from India to Nepal. So that's a sizable formal remittance, but lots of that, 2 to 3 times in a very estimated figure that comes out in the media, is through an informal channel, that physical cash is being carried across the border. So that's 2 to 3 times the size of the remittance market is still there right now. So that's something that needs to be worked out.
Yeah, yeah. Thanks a lot, Neelesh. My next question would be to Mr. AGR. So I've been working with AGR, got chance to work with him in few of the our earlier assignments, and have seen his passion towards resolving the problem and being an product chief at Card 91. Would like to understand from you that we understand the cross-border payments needs a transformation, but how this transformation you see in your views, that how it is going to be built?
Yeah, sure. So, the cross-border payments involve 2 items. One is movement of money across borders or exchange of currency within the same country. And both of these don't have a centralized clearinghouse like we have for IMPS, RTGS, or NEFT. That doesn't exist across countries. Because of that, it becomes much more complex. And traditionally, it was being done, as the other panelists mentioned, using the SWIFT messaging, and it was settled through correspondent bank arrangement. And because there are a lot of hops which are involved, it had 3 major issues. One was the cost, because every participant in the payment transfer wants to take a fee. And second is the time zone difference. Somebody is in the US, somebody in India, banks are not operational 24/7. So the timing, same day availability of fund was an issue. And third, if one process in the hop gets delayed, the entire process gets delayed. There was no visibility in terms of tracking a payment. Now those issues have been solved to a great extent by fintechs. There are various names which come to in the market. What they have done is they have kind of converted a cross-border payment into a equivalent of a domestic payment by riding on the domestic network, by consolidating the entire remittance, bypassing SWIFT messaging for individual transaction, and by leveraging their own tie-up with banks and designing their own technology. Now, over these fintechs, the main issue which comes from the regulatory aspect is that they are concerned about the protection of consumer funds. So if a fintech takes the money and doesn't remit out, who pays the money out, right? Where is the risk? So that's one concern. Second is cross-border payment involves lot of money laundering and terrorist financing. So how do you counter those aspects, AML and CFT, is the second impact. And third, which you can, we Indians can feel it, is that it has an impact on the economy, because if more funds are going out, the rupee depreciates, and it makes a big impact on the economy. So to cater to all these aspects, there are a lot of regulations and lot of paperwork, lot of cost involved, and these are being resolved to a great extent by two big transformations, one which has already happened, another which is in the form happening. So the first one is little background. Whenever you take a credit card, debit card from India, go overseas, and you swipe the card and gets a merchant goods. And suddenly you realize that you don't want that particular item, you are supposed to get a refund back. And how do you get the refund back? It used to take long time. So the networks like Visa, MasterCard, what they have done is, they designed a messaging platform and settlement by which they could push the payment of the refund from the merchant back into the issuer's credit card or a debit card. So all that they require, instead of bank transfer, where you need IFSC code or SOT code or SWIFT code, here you just need the 16-digit card number and you can push the payment. So same mechanism which was used for refund from merchant to the card holder, they have transformed it for cross-border payments. So if I have to send payment to my sister in the US, I know her card digit, I can push the payment. And the beauty is, Visa, MasterCard, they're present in 100 plus countries. So one simple connect will give you 100 corridors. They cater to 30 plus currencies, and it is 24/7 because the card network activates all the time. And there is no settlement risk, because whenever you swipe a card, the issuer bank and acquirer bank already has a settlement arrangement, and this cross-border payment also goes through the same settlement arrangement. So this particular transformation has already happened. A lot of payments are coming into India, and there are fintechs which have, linked their payment at the remitting side to a WhatsApp message, consume their APIs, and they are able to tell the beneficiary to link their card number at the destination. What is it making is, I have to send money to somebody, it is as much easy as sending a WhatsApp message. So there are fintechs who are working on it, riding on the card rails being provided. Now the second transformation which is happening is, like we have UPI in India, we have Pay Now in US, Prompt in Singapore, Prompt Pay in Thailand, and there is another UPI equivalent in Malaysia. And UPI is connecting to Pay Now in Singapore. Prompt Pay and Singapore are already connected, Thailand and them. So what they have done is bilateral relationships, wherein you just give the UPI ID and you can send the payments. But the drawback with this particular system is, to connect 4 countries, you need 6 bilateral tie-ups. If you want to connect 10 countries, you almost need 45 bilateral tie-ups. That's a big cumbersome, 45 tie-ups, integrations. So BIS, which is Bank International, has of settlements, has designed a project called Project Nexus. So there they have created a network of networks. So they are saying, I'm a network connected to each individual UPI equivalent real-time payment network of various countries. So you just need one tie-up, and then you have access to all other countries. So this is something which is evolving as we speak. This will again transform the cross-border payment and make the equivalent of IMPS, NEFT, RTGS clearing for cross-border payments in the C2C space. So these are the 2 transformations which are happening.
Yeah, sure. You want to add something, Subhrajit?
Yeah, I mean, interestingly, AGR brought about the concept of UPI. So I think there are 2-3 fundamental changes happening in the last 5 to 6 years, right? Traditionally, there have been 2 broad networks of money movements. One, at a B2B side, SWIFT was the only alternative to move money. Whereas Visa, MasterCard, and the other card networks, Discover, Amex, were moving money from the consumption side, right? I think those kind of walls are breaking down, and each one is kind of interceding in their territories. And then there is a third element which is coming up, which is something called rise of domestic networks and wallets. What that does is, and I think as Discover we work with, I think 28 or 29 domestic networks in the world. What domestic network basically does is it kind of cuts down the cost of transaction in a country. The best example being RuPay in India, right? But there are different domestic networks in different parts of the world. One challenge for them is, one, while they can cater to a domestic audience, how does the same product cater to when that same cardholder moves or customer moves out of the country? I think there is this network of networks concept which is being piloted by other networks as well and us as well, is to look at how those connections with one connection, let's say tomorrow a domestic network in Nepal can actually use their card across 180 markets, right? Without doing 180 bilaterals. So I think that is one fundamental change is happening. The second is there is this A2A framework which is coming more prominently cross-border. A2A is fairly well established in markets. There are some very strong wallets, PayMaya in Philippines, for example, Gcash in Philippines. But they have all the same challenges. Those wallets don't work outside their country rails. I think the announcement PhonePe made recently that their wallet can be used cross-border. I think this is one of the starting points where there'll be more evolution of these domestic major wallet players with the help of aggregators, with the help of probably networks or some of the form factors can actually start traveling outside of the home market, which will create a very interesting challenge as well as opportunity to bring down, one, the cost of operation. The second is the speed of money movement cross-border. But all this we talked about caters to only B2C or C2B. The biggest digitization opportunity actually lies in B2B, because that's one space which is actually ripe for disintermediation. The cost structures are very high. And last but not least, the amount of paperwork required. For example, if you have to send payment to China, you actually have to register in China yourself to send a payment. The amount of invoices you need to actually submit to actually send a payment in a country like that is phenomenal. So a company like Aleta Payments, I don't know how many of you have heard of it, but they're doing phenomenal work on money movement into China. I'm sure those equivalents will come in various markets. And in next 3 to 4 years, there's massive scope of disintermediation and disruption in cross-border B2 space. Not only because we are working on it as a network, but all our other fellow network participants are also working on it. That's wanted to add that.
Yeah, that was excellent. Neelesh, would you like to want to add something on top of that? How you are seeing this prospect?
I would again like to talk based on the cross-border between Nepal and India. If we take an example of if one of my friend or my family member has to send or remit P2P remittance from US to Nepal, it runs on a real-time retail rail in Nepal. There are partnership being made with the remittance agents or the remittance companies that is run by the banks or even the bank-to-bank related arrangements. It only takes almost 1 minute. Within 1 minute, the beneficiary's bank account gets credited or one of the wallets. There are around 37 such non-bank payment providers licensed by the central bank in Nepal. So it can be credited within 1 minute of time. So would be the case for any of the jurisdiction to India. So that's what I believe. But when it comes to sending a remittance from India to Nepal or from Nepal to India, if the beneficiary's account in Nepal is with Nepal SBI Bank, we don't talk about the minutes or the hours, but we talk about the +1, +2. So if it is the same bank, Nepal SBI, it takes T+0. By evening, I get the fund. But if it's other than the Nepal SBI bank, it's +1, +2, and +3. That's the reality happening right now. So the same is the case for the trade finance related trade payments as well. On the Nepal to India side also, the Nepal SBI has actually been using the NEFT channel for remitting from Nepal to India. that's possible. But for P2P related and business related transactions, there is lots of things that needs to be done. So the retail, the domestic rail is very strong in India. In Nepal, we're also trying to pick it up from a real-time retail platform other than our ACH and other payment systems. So if these retail domestic rail, real-time rail can actually integrate the regional level integration on payments can actually happen. So whether that's a direct bilateral arrangement between the domestic rails of two countries or riding on one of the other international network, that is something that we're trying to work out as a solution to the problem that we are having with respect to the cross-border payment between Nepal and India. So.
Yeah, excellent, excellent. And Neelesh, maybe I had one more question for you. That you're working in Nepal, building systems for the banks. Maybe you want to put up some thought on that, that how you are building that, and the way you are transforming the payment, domestic payments which are currently happening in Nepal, how you are supporting the products for peer banks in the Nepal. Would like to, so that audience will have some idea on Nepal market.
Thank you. Basically, Nepal Clearinghouse Limited, it's basically promoted by the central bank and the banks and financial institutions. So majority, 90% is actually held by the central bank. We basically work on building up the national payment infrastructure, which is for the public good infrastructure, typically on the payment space. So almost you can take an analogy of equivalent to NPCI for Nepal. So we do the check truncation system, ACH system is there, real-time retail platform is there. We even provide the integration framework of the payment gateway related open APIs to the banks and other entities as well. So almost all 100% of the banks and financial institutions are connected with us. We even provide the services of RTGS as well. We have an open API based platform called as an NPI, National Payment Interface, which gets connected with the banks, non-bank entities. Government is one of the largest user of those infrastructure. Almost 95% of the total payment transactions of the government is actually processed through our infrastructure. That's one of the major milestones the government has also achieved through this infrastructure. And now our primary focus is to establish the national payment switch, and the domestic scheme, card-based scheme is also coming up. And apart from the banks, the central bank has actually taken a call last maybe 3 or 4 years back to open up the licensing for the non-bank entities as well on this space. So lots of fintech institutions which are licensed as the PSPs, payment service providers, and payment system operators, the infrastructure providers, they have come up. So we have opened up our infrastructure for those entities as well. So as of today, other than the 65 plus banks and financial institutions, close to 150 plus other entities, including government, stock market, broker players, brokers, merchant banks, large fund managers, government, even the largest remittance companies are also using it. All PSPs, PSOs are using our infrastructure. So the domestic rail for required for the payments infrastructure is what we provide as a service to the entities in Nepal. So the basic difference I find it is in Nepal, other than the core infrastructure, the size of the entities or the stakeholders that we deal with are very small entities in kind of infrastructure requirement, and in terms of the capital that they can actually invest on such the infrastructure. So we also provide not just the core infrastructure, but the infrastructure that is actually used by the banks or even the other players as well. So that infrastructure as a service is also provided by the clearinghouse. So in terms of the number of transactions, we processed around 15.5 trillion Nepali rupiah equivalent of transaction last fiscal year. We believe that will go up by around to 18 to 18.5 trillion equivalent of non-cash related transaction. So that's close to around 330% of GDP is what we process. And just to have a thought, the cash to GDP ratio in last 3 years, it has gone down thanks to COVID as well. So it's right now at around 11.75 to 12% is what the cash to GDP ratio is. So the whole target of the government and the central bank is to bring it down close to below 10% is what the target is, and we are working towards facilitating to help that achieve. Yeah.
Thanks a lot, Neelesh. We just wanted to understand from the neighboring country how things are happening out there and how you guys are helping to raise the bar out there. So thanks for that insights. Maybe HR would like to understand from you, being a product chief officer, I just wanted to understand how do you see these processes are going to simplify for the users, where the user will be easily be adapt to the cross-border payments. So do you see any foresee there?
Yeah, so in terms of simplification, we have spoken on the consumer to consumer payments. So RBI has permitted a lot of digital journey enablement with respect to consumer remittances. So they are accepting A2 in the form of a self-declaration which is digital up to $25,000 per transaction. Even the KYC part, it has come out very well in terms of doing in a digital fashion. So I would actually touch in terms of the product simplification for a B2B payment. And if you look at Indian consumers or even Indian exporters, which are dealing with small value goods and services, and they're exporting out of India, or Indian consumers buying from overseas. So RBI has put a framework long back called OPGSP, which is Online Payment Gateway Service Provider. And in that, up to $10,000, you can export the payment and the payment can be received without having an entity in the country where you are exporting to. And what it does is, in partnership with a bank, the importer who is buying from Indian exporter has to pay in only local currency. So he pays in US dollar, euro or Singapore dollar. All that money is collated, put into the Nostro account of the AD1 bank, and they will convert it into INR in the export collection account and give to all exporters in the form of NEFT or RTGS transactions. So what this has done is Indian exporters are having reach at multiple countries without being concerned about the payment trail or how the payment would be collected. And similarly, the reverse flow up to about $2,000, if somebody is importing from other countries, they can make the payment in INR. And that has also has become much more simplified. Of course, there are a lot of operational challenges on the import side, but export is very seamless. And there are a lot of fintechs in the industry who are actually getting this entire export piece simplified by embedding a link within the invoicing system and collecting the payment overseas. And here, there are two things which happen. To make the reconciliation easy and automated, banks typically issue virtual account numbers so that you can assign it. On card 91 side, we are actually initiating or assigning virtual card numbers. So we attach a simple card to that particular account and generate hundreds and thousands of virtual card numbers, which can be attached to an invoice. And when the payment is pushed to that particular virtual card number, invoicing reconciliation happen automatically. And you can put a rule: if the invoice is of 6,000 USD and you have received less than 6,000, you have an option to actually decline the transaction to prevent any kind of partial payments. So there is a simplification which is happening for small value e-com transactions, which are powered by the framework given by RBI and facilitated by fintechs in the B2B space.
Excellent, excellent. Thank you so much. I really thank three of you to give us that much of insights into it. So would like to ask from the audience perspective if there are any questions to the panelists. Maybe we'll go one by one. Yes, sir, please.
Yeah, see, the outbound foreign exchange transactions, even at remittances or commercial transactions, etc., are ridden with friction. So if I want to, transfer $5,000, when will this, so much of friction be reduced? It's a pain, to be honest, and it was a pain 20 years back. It continues to be a pain today. And nothing has been done, to be honest. I still need to go to a bank or, submit the A2 form and, So when we talk about this UPI payment for outbound transactions, and I believe 20 billion goes out, right, in terms of fees and a whole lot of things. What is the industry doing or anything about it, or the banks?
Okay. So,
Firstly, is it a fair question?
yeah. So I think, so you need to look at outbound with card rails not yet permitted. Inward is permitted. There are a lot of fintechs which have solved this problem. while I was with InstaRem, INSTAREM, instant remittance, we use the Para 10, and you are able to at least from India, the payment could go on the same day, all digital journey. There are companies like Wise, TransferWise historically, which permit you to send up to $5,000 for multiple purpose and $10,000 for US dollar. There is for education purpose. So there is lot to be done, particularly there is a LRS limit which you give as a declaration. Now the banks are mandated to verify the LRS limit from the RBI website putting the PAN number. Now that is the only journey in the digital where there is a break. And RBI hasn't given the APIs for that. It has been an ask for almost 5 years. And they may have a genuine reason. They don't want to make money moving out of India easy for a capital account transaction if somebody is investing. They have introduced a TCS, right, tax collected at source. So they are making it tough for their own concerns, their own reasons from the finance ministry. So what I can say is there are fintechs which have solved this problem, one country to another within 12 seconds, 10 seconds. Outward from India also that has been achieved if it is during the daytime within few minutes. But again, the LRS is the only gap which we find. So it's a genuine question. There is friction, one element out of 10.
Yeah. Yes, sir, please.
Yeah, can you hear me?
Yeah, yeah.
Yeah, thanks. Great presentation. I've been in cross-border fintech for the last 7 years, multiple use cases, currently looking at inward remittances. Spoke to NPCI yesterday as well. So while I understand that UPI is being used for now, let's say on the Singapore-India corridor, right? So between Pay Now and UPI. The idea is, of course, it would be instant, which is great, better than waiting T+3 on SWIFT. But on the actual cost reduction, it seems that it's only going to have a 10% impact. So do you see scope here to actually reduce cost on cross-border remittances? Time, yes, we understand UPI will solve for that. And that's nice to know. But for an individual, especially on P2P, don't you think that cost is a more important factor? I'm happy to wait 3 days if you give me a greater than a 10% reduction.
So let me get it and you can join in. So I think the cost is a function of number of hops in the journey or number of stakeholders, right? What UPI moment or whatever you want to call it is basically reducing the number of stakeholders in that journey. As transactions become more frictionless, which obviously will reduce the time, it will also reduce the number of stakeholders in that journey. And I think that is an automatic reduction. Now, to start with, whether it's 10% or 15%, but the journey will obviously continue to make the transaction more efficient, which will actually lead to a reduction. So if you go back 10 years, just look at the cost of remitting money compared to today, even on InstaRems or Numerails or even TransferWise or something, the cost has definitely shrunk. Now, how much it shrink will happen in the next 5 years, that's for speculation, but I think what will happen is number of stakeholders in this journey will definitely reduce because a lot of the regulators are actually doing direct tie-ups. So the tie-up between RBI and MAS, for example. I think those are the fundamental changes which will happen across multiple regulatory environments, and then that would definitely lead to reduction in cost. It's not going to be automatic, but it's going to be a byproduct of the number of stakeholders getting reduced.
So one aspect is World Bank declares, right, on a quarterly basis, what is the average cost across all the players, fintechs, banks. So if you look, it's already about 70% down from what the banks have been charging. The main problem comes in when you have a small value transactions of $100, $150. That's where the pain is. And there is a reason for that is the FX risk, right? You know, today I do a foreign transaction, I know the FX rate. But at the time of settlement, the same FX rate would have changed. So to cover for that FX, because FX, though it's a 24/7 market, is not available all the time. So to cover that risk, they put a price point on that. So what I recommend is once the card rails, if you use, the number of hops are only the acquiring bank and the issuer bank, only two, nobody else. And that settlement process today works smoothly. So if you are able to get the Visa Direct or MasterCard send, your cost will dramatically reduce. And that's what we have seen for the inward remittance. Outward is not yet approved by the regulation. As and when it happens, you will have a huge reduction. So technology will help you reduce that cost, and settlement risk will continue even in that particular rails, for which they will price it to you. So that's, short answer for the cost aspect. And somebody mentioned about Swift 3+ day. Swift also has come with an innovation called Swift GPI. So they have made it able to track a payment through the APIs as you track a courier. Second, they are made almost 40-50% transactions on the same day. And they have also upfront shown what is the fee each hop is going to take. So if you are sending $1,000, they'll say 980 will be received, $20 is the fee in between. So there is a transparency which has come in. I doubt all banks might not have moved on to Swift GPI, but they have also progressed. So there is a lot of improvement happening, but still the UPI movement is yet to happen, and I believe Project Nexus will make that big difference, because no more bilateral tie-up, network of networks, and you are able to send payment just taking the UPI handle equivalent and not disclosing the entire banking account details.
Yeah, I think somebody had one more question.
Yeah,
Right?
I have a question. So just a small question, Rama sir, continuing from the point that you had made on the 10,000 limit. So that was for the less than 10,000, it can be brought into India in an aggregated way, which is OPGSP. But what about those transactions which are more than 10,000, the larger B2B wholesale transactions? And yesterday in one of the panels, they said that 50% of global trade is open account transactions and is ripe for disruption. So is there anything happening on those lines for the larger value transactions in cross-border?
Yes, so today the way the framework, regulatory framework has simplified below 10,000, which is for exporters, small value. On the higher side, there is a lot of innovation happening using blockchain, not cryptocurrency, but blockchain. And that's where the entire, the trade supply chain kind of transactions are getting at a lower cost. But that is yet to pick up on a large scale. It's happening at few corridors, and it is being still experimented with some of the leading global banks like Citibank, JPM, powering that particular transactions. But it is yet to be felt by the common exporters in India who are able to make it. So it is somewhere down the line, but all that innovation is happening using the blockchain technology and the banks which are licensed powering that particular aspect. So it is ripe for disruption. There is huge scope, but it has already started, including the documentation, because high value import export needs a lot of custom clearance, invoice, lot of other verification. All those things are being automated with the blockchain technology. So that's where it is happening in initial stages.
Thank you, sir.
So yeah, in the case of export payment, you mentioned that it could come through a digital channel, or let's say sharing the virtual account number. So how the banks are settling those transactions into RBI's EDPMS system? Because now FIRC banks, so in this kind of transaction, do you issue the FIRC to the bank so that bank can close the transaction in the system?
Yes, so the exporter may have an account with Bank A, and the entire GSP arrangement is with, say, some Bank B. So the payment is received in the nostro of Bank B, he converts to INR into the export collection account, and then he does a NEFT RTGS into the Bank A's exporter's account. And the exporter can go to Bank A and ask for the FIRC, and they are getting it as a eFIRC within the same day. So that also has been streamlined by a couple of banks. I know few of the fintechs who have already done it. With respect to EDPM reporting, that again depends on the bank whether OPGSP, according to my information, is outside that reporting at the present moment, because these are small value import-export on goods and services. We need to dig deeper to understand that, the finer points.
So one follow-up thing on this, you mentioned like it comes through the NEFT and the exporter need to approach to that bank to issue the eFIRC. So I was a banker, I handle trade finance. So I think that is more tedious process to approach another bank and get eFIRC.
No, the fintech which has tied up under the OPGSP, they are giving the EFIRC upfront
Okay.
and giving it as part of the payment coming in. You can take a look on couple of websites like Skydo, SKYDO, Xflow. They are facilitating these upfront. And the bank partner they have that capability to generate FIRC and give it to you immediately. Not all banks, some of the banks.
Thank you.
Any view on Ripple, which will cause ripples to Swift and all?
So Ripple again came with the idea of the blockchain network where you connect once and all the other people who are connected, you have the capability. It had a lot of promising, but the problem is they tried doing the XRP, which is the fiat currency going into a crypto, and then again going back to the fiat, which is the liquidity issues. So crypto is not accepted everywhere, and because of that so-called marriage between RippleNet and the crypto, it has died down, particularly from Indian context. In other parts where crypto is legal and accepted, the payments are going through, and RippleNet, XRP, and then the fiat currency is happening. But the risk is the liquidity availability is not always there against a cryptocurrency like XRP.
Sure, but they're signing many banks and the cost is like very, very low. So it's the best solution. So at some point of time, the world should logically adopt it, right? I mean, because it's a better solution.
So as long as it is RippleNet blockchain technology, you're right, network of networks being created. If they don't bring in the XRP component, people are happy, including Indian banks. But you never know in the journey from A to B, are they converting into XRP in between and you are not aware of that fact? Then it gives rise to a lot of other regulatory concerns. So that transparency doesn't exist with RippleNet because of that aspect. Otherwise, you are right, the blockchain technology makes it simpler.
Okay, yeah, thank you, Rama, and even Subhrajit and Neelesh to taking us through these insights and taking all the questions and answering all them patiently. So I would like to thank our panel a lot to bring these aspects and different innovations which are happening in market to us. So yeah, thank you. Thanks a lot. I would request all to just give a round of applause for them. Yeah. Sorry, I missed that.
One last question
Sorry.
if you want to take.
We can take Vamsi.
Hi. Hi, sir. This is Vamshi from Polygon Technology.
That was Bollywood.
I have a question that what is your plans? Like, are you looking blockchain technology? Are you developing any POCs using for the cross-border payments? Like, blockchain is a perfect solution. Like you are already telling about it. Even JP Morgan is using our platform. So that is what my question. Like, what is your future plans? Are you going into the blockchain? Are you developing any separate platform for cross-border payments and trade finance? This is the best use case for that.
So at the moment at card 91, since we are on the issuance side, we want to restrict at present to the card rails only and optimize the cross-border payment. So as part of our package, we just not give the issuance processor, but also the ACS for 3DS, the tokenization on the issuer side, and enabling cross-border payments inward to India, and in the future outward from India. So we want to restrict there. Blockchain, you never know, maybe after a year or two we can take a look. Thank you.
Same question for Discover Finance, sir. Subhrajit, sir.
Primarily, our focus has been on cross-border is to move money movement from a card to account perspective. I don't think we're looking at blockchain right now. We're looking at more of card to account rails, and I think that's been our focus for the near term. Who knows what will happen tomorrow?
Thank you so much. Thank you, sir.
Yeah, I mean, even rightly said, Subhrajit, it's almost left to the time how it gets adopted and the participants who will be there into the blockchain. Yeah, with that question, I would just like to thank all of you again, once again, and thank you very much. Yeah, thanks.